Hey everyone, welcome to the channel. Today we're going to be talking about our decision to refinance our home mortgage during a pandemic, no less. If you're new here, my name is Mary. This is Pennies Not Perfection, and I talk about our finances, our financial journey, and the ways that we are still winning with money by being consistent, even though we're not perfect. A lot of you actually have found me through my home buying videos. I've talked a lot about buying our first home and the mistakes and tips and tricks and good things that we did along with the bad. So if you found me either through my mortgage payoff updates or my home buying videos, this video is going to be right up your alley because I'm talking about refinancing that FHA loan that we got when we bought our first home. This is our mortgage amortization schedule, and we have been highlighting it as we pay off our mortgage. We have been doing a couple things to pay it off faster, so we've actually gotten pretty far in the first 3 years of owning our home. But because we have an FHA loan, every month we're paying $99 in PMI, private mortgage insurance that doesn't really benefit us at all. I've been looking for a refinance option pretty much since we bought our home. Every couple months I would email a couple different mortgage brokers, and often I would never get anything that made sense to refinance, and a few even told me just to stop asking because we had such a low rate. Even with the PMI, it didn't make sense. So why did we decide to refinance during this crazy time when we're potentially facing layoffs and struggling with our emergency fund and buying a car, and it's just a lot of things happening all at once? But why did we decide to refinance? Let's talk about it. First, we actually hit 20% in equity in our home. Because our neighborhood has increased in value, our home is now worth more than what we paid for it by about $20,000 to $30,000. This, combined with how we pay a little bit extra every month to reduce our principal, that has given us at least 20% of equity in our home to value ratio. This is generally the point where if you have PMI, it can be dropped. If you have a conventional home mortgage, you can ask them to drop it and they'll do an appraisal and then drop the PMI from your loan. However, if you have an FHA loan like we do, you can't get rid of PMI without refinancing. A few years ago, they changed how FHA loans work, and they no longer let you drop PMI for the life of the mortgage. So we could be paying $99 for the next 20-something years. That did not sound good to me, so I've been trying to drop the PMI by refinancing since we got our loan. Now that we had hit that 20% mark, we were eligible if we could get a refinanced loan. However, because I like saving money and I don't like to waste money, I wanted to make sure that it would be worth it before we did a refinance. In order for the refinance to be worth it, we had to make sure that the new rate on our new mortgage was going to be low enough that it was even worth the closing costs on the new loan. Because when we got our loan, we already had a 3.625% rate. That was a really good rate, so it was really hard in the last few years to get anything lower because everything was around 4%, which is obviously not a good choice if we're trying to reduce the overall cost. Due to the economy having a once-in-a-lifetime so far event, the interest rates on mortgages had dropped around the beginning of March. We were finding offers for under 3%, and that was a great option. So it would drop at least half a point, and even more if we could get under what we originally were quoted. Combining that lower rate plus dropping PMI from our mortgage, we would get a much higher amount of our money every month going toward principal reduction. And what's more is we were going to refinance into a 15-year mortgage. Yes, we have already reduced our mortgage by a couple of years, but we're still in the 20-year range, and going down to a 15-year mortgage would allow us to pay off our home much, much faster. We are likely to keep this home for a long time because even if we move to a different neighborhood for a school system, we want to keep this home for a rental. So the goal here was to get a mortgage that we could have the home paid off for a lot faster. So combining these things, a lower rate, no PMI, and a 15-year mortgage meant that we would be paying much more every month toward actually owning our home and having no mortgage. This all sounded amazing, so we just had to find a mortgage lender that would refinance our home during this time and offer us a rate and a closing cost that made it worth it. Shopping for a home mortgage during this time has been crazy because mortgage companies are overwhelmed, and they actually had so much interest in the beginning when rates first dropped that a lot of them raised rates immediately after that. So the first week we were getting offers for 2.99 and then it went up to 3 and more, so it really wasn't worth it at the time. Basically, every couple days of this whole pandemic, I have been emailing the mortgage companies that I was shopping around and seeing what option they had for us. In order to make it worth it for us to refinance, we had to get that lower rate, drop PMI, and also not spend that much in closing costs. To refinance your home, you're getting a new loan, which means there are costs to create that loan. So you'll have to pay closing costs all over again after you already did your first time when you purchased your home. We shopped multiple loan companies and their rates for closing costs wildly varied. There were companies that were charging us around $2,000, companies over $4,000. Most of them came in around the $3,000 range. For every extra $1,000 in closing costs, that meant it took longer for us to break even. So that meant if we had to sell the house before we broke even, then we were going to lose money and refinancing just wasn't worth it. There were a lot of things that had to align for refinancing to be worth it for us, and luckily they did. We finally did get a regional bank in our area to refinance our home with all of the things that we wanted. So our new rate is going to be 2.75%. We will have a 15-year mortgage. We are only paying $2,000 in closing costs, and they waive things like an appraisal, and we are not going to be paying PMI because it will be a conventional loan. Another reason why we decide to refinance, even though we are dealing with other financial goals right now, is that because the closing costs of the loan can just be added to the end of the loan, so we don't have to pay anything out of pocket. This does increase our loan amount from what we owe right now, but because of all the other savings, it actually puts us way ahead in the long run. And we don't have to pay anything out of pocket, so that means we didn't have to save up in order to do a refinance. We could just take our loan and credit information to a company and have them offer us a loan. I'll be honest, it did take a lot of work to get all of those things. Most companies wanted to charge way more in closing costs than I was comfortable paying, and a lot of them would not drop the interest rate, even though another company was offering a lower rate. The mortgage company I thought I was going to go with in the beginning is not who we actually ended up going with. We went with the best financial option, and that meant a bank that I had a bank account with but was not even considering originally for a mortgage. I actually didn't know they did mortgages. So if you've been wondering if it's worth it to refinance during this time period, I would suggest that you really look into it because it might be. It also might not be. It likely depends on a number of factors that go into the mortgage and how long you're going to pay it, what your interest rate is, what interest rate you can get, the closing costs, all of these things that we had to weigh. You'll have to take your own situation and those numbers and look at it for yourself. I am very, very excited about going to a 15-year mortgage because that means our mortgage payoff will go so much faster, and I'm very excited about that. It will adjust and change our budget, but because we've been putting so much towards savings and reducing our expenses every month, we will be able to handle a slightly higher monthly payment than we had before. Knowing that my money is not going to be going to private mortgage insurance every month and instead will be reducing the principal of our mortgage loan balance is very, very exciting for someone that is somewhat allergic to debt and doesn't really want to be paying loans forever. We decided to go ahead with this refinance because in the end, over the term of the loan, it will save us tens of thousands of dollars. This money can be better used for improving our lives, saving for the future, for retirement, even going on a vacation once or twice a year, because that money isn't going toward things like interest and insurance. So it's going toward things that actually improve our lives and make our lives better. So that's why we decided to do this refinance, and I'm super excited about it. I think it's going to be great. We are still in the middle of it. So if you have any questions about refinancing your home right now during this time, let me know in the comments, or just refinancing in general. We are literally in the middle of it, and while it's in underwriting right now, we are excited about it, but we are still waiting for the final paperwork. So once that comes through, I will be showing all of the details because I love being transparent about real estate and showing you the actual numbers because I feel like that always helps. So if you have any questions, let me know. I'll be happy to answer them or find the answer for you if I don't know it. All right, side note, a few things about the refinance experience during this time that have been weird. One, they don't respond quickly. They're so overwhelmed at almost every mortgage company and bank that they just don't respond that quickly. 2, a lot of these people are working from home now, which is not normal, it's new for them, so they're even slower than they were before they went home. 3rd, it's just a weird time. You're not going to have a closing where you're in person. You're signing everything via like DocuSign and faxing and scanning stuff back. You're just going through a process that's a little bit different than any other home buying or mortgage lending process probably ever.